What's up, everyone? Welcome into this video here. Today we're going to talk about how you can avoid fakeouts on the charts. So basically, let's jump right into this video here and let's talk about the first thing, and that is going against the trend. So when you have a higher time frame trend, let's say this is the forward chart over here that I'm drawing. So let's say that you have a 4 hour going bullish here. So let me draw some candles that's going bullish here so you can see the trend clearly. So you have a few candles that were coming up here, going bullish. Let's say that this next candle here opens up, and it's looking like this right now, right? So only a wick coming up like this, small wick, small body, everything's just setting up. So the candle just opened up here, right? So nothing much yet, but we know we are pretty bullish. So the first thing I want to say is that this is the lower time frame over here, and we're seeing a range. So let's just draw a range real quick like this. A lot of candles coming up here. So we see a lot of candles. We're basically coming up to this resistance here, and now we're creating a new resistance here on the lower time frame. So we're creating a new resistance here. You know not to take the first sell, but now that we're closing up like this, you basically can see that we have a lot of candles. Let me draw a few more here. So basically, we have a lot of clean range. If you look over here to the left, let me draw this as the 15 and 30-minute time frame here. So basically, this is the 15-minute, 30-minute time frame to the left, and on the right is our 4 hour time frame. So our 4 hour time frame just opened up with this candle here. That's just right here. So when you see this candle over here that just opened up, all you see here is this candle in the 4 hour time frame. So we basically opened up two on the 15 and 30, and this is the 4 hour, this is the 15 and 30 here. So if we're looking at this new candle that opened up here, you could expect this candle here to begin to come up, but we don't. We begin to come down here now, and we begin to we begin to close bearish with this candle here. So you basically see this candle closing bearish like this. So right now, what you're seeing is a candle closing below this new support. Basically, you have this range right here, and you see this candle closing below that. So you're thinking to yourself, oh, now I can take sells here. And yeah, that might be good because we have a range too. But the thing is that now the 4 hour time frame is looking like this. And what do we expect from the 4 hour time frame when it just opened up here? We expect that we could begin to come down first, and then we could see a move back up because now the bottom wick is created for it to move back up, because we know 80 to 85% of all candles have top and bottom wicks. So if we're seeing a very bullish trend here on the 4 hour time frame, we don't want to go against the trend here at the first sign or at the first candle of a 4 hour open or a daily, like you see it very bullish daily trend or very bullish 4 hour trend. Let's say that this candle just opened up, that one on the 4 hour, and this is the first candle on the 15. You don't want to take that sell because this could just be the 4 hour time frame making its bottom wick to come right back up and follow that trend over there. So what we're really seeing is basically sellers getting grabbed into the market right here. So right here, we're seeing that candle begin to move down here and coming right back up and leaving a wick like this, because now what we're seeing is sellers getting grabbed into the market here on the break of that low. So what we really want to do here is basically be the ones to take advantage of the fake out here, because now we can close up like something like this. And that will be on the 4 hour time frame. That will be the candle coming up like this again here. Basically coming down and creating that bottom wick and coming right back up, breaking that high, and maybe even breaking the previous highs over here. And that's the previous highs on the 4 hour time frame like this. So you see what I mean? We gotta avoid this fake out here, and that's really one thing you can be observing, like the higher time frame trend or the overall trend in on the 4 hour time frame, 1 hour time frame, daily time frame, like overall those higher time frames to see what is the trend. Could we be seeing a fake out here because it looked too clean to be true almost? It almost looked too clean, this range here, to take advantage of. You were thinking like, oh, this sell here is going to be amazing. We're going to get like 200 pips here. But yeah, we could see 200 pips if it went down, but we didn't, because now sellers are grabbed into the market off this low right here. And now what we're seeing is this candle moving back up because buyers know that the sellers were activated here and they want to take the opposite side of the market now. So basically, what we want to wait on is basically to see this kind of like liquidity getting grabbed here on this low for the buyers to come in, because we want to follow the trend here. We want to follow the trend on the forward time frame, and we do that by understanding the anatomy of this forward time frame. So let me draw a candle for you over here. Basically, what we're seeing is this. We see a forward time frame being very bullish. We see the new time frame or the new forward candle opening up, coming down, creating a bottom wick here. And now the candle is looking like, oh, sorry, let me draw this another way. So now the candle is looking like this. When we see this over here to the left, this example here, we see a 15-minute time frame creating a range. We see the new support break below that support. We get a nice range over here to the left to take advantage of, but we can't because we understand the higher time frame, and we understand that, let me draw this purple here. We understand that this here is basically just the bottom wick being made, and that is just this example over here. So when we're looking at this here, it's just the bottom wick. We get another perspective on this 15-minute and 30 time frame over there. Because when we have another perspective on it, we can understand it better too. So we have another perspective in the way of saying, now we can understand that this is basically just the bottom wick being created. Imagine how many sellers were entered in right on the break of that low. So now we can begin to avoid that by seeing that over and over again. And I bet some of you have tried this fake out before, like getting faked out. The sell looks perfect. We got a lot of clean range. We got forward break of low, but yeah, that fall broke the low and turned right back against you because we were bullish. So all that was right there, that liquidity grab you see right there, was basically just all it was this forward time frame creating this low to move further up, because we know that the charts is having its language and it's moving in higher highs and higher lows. So it's moving like this: higher highs, higher lows, higher highs, higher lows. Exactly the same way as we're creating a wick: higher high, higher low, and we're going for the higher high. So that's one way to avoid the fake out here on the charts. That was just one example, but really understanding the higher time frame trend. So the next thing I want to talk about is really lack of volume. So let me just use this example here as we have right now. And let me say that lack of volume can be really frustrating to trade with, because you can see the perfect setup, like the cleanest setup, but you ain't got no volume, so you ain't moving. And that's like, it makes a lot of sense. But when you first got taught about like charts or candlestick anatomy and all of that, you really think to yourself like, oh, all I gotta find is a pattern here, and then we can, take the trade and it's a winning trade. But yeah, we gotta just think in probabilities too, and we gotta think, know when to trade and how to trade. So when to trade is really, really important too. So when to trade, it's really looking at, like, let's look at this chart here. Let me say we got this one here. So let me create a little bigger range. So now let's say that we actually begin to move down here because the trend wasn't that strong on the forward time frame, or we just got a range on the forward time frame. Let's say that. So we begin to move it down here. And now we see this bullish candle again here. So let me just create a little bigger range. Okay, so now that we got the bigger range here, we can clearly see that this is looking like a pretty good range here we have, actually. So let me draw this on the fall too. Let me give it this a wick here, and let me say that we have like a bearish candle like this or something. So, and we're coming up to resistance too. So basically, let's say that this forward time frame here is coming up to resistance. We have a few bullish candles. We have a bearish one. We can't really figure out what way we're going here. So we have a range on the lower time frame too, like this. So basically have a new support right here. And we're looking to see if we can get a breakout out of this range here. It looks pretty good to me. But what we tend to see when we have these low volume times is maybe candles without top wicks, bottom wicks, something like that. And we know not to take the trade like that. But you see a candle closing below, something like this. So let's say you got the breakout candle here. And now you got the breakout candle right here. You got the perfect low to take the entry off. Let's say that's the forward low too. So the forward actually beginning to look something like this, and right at resistance. And now we can basically take the trade here, you could go in bearish because now we're at resistance on the 4-hour time frame, so that could be rejected. Let's say we have only 2 bullish candles here, but we're moving down overall on the daily time frame and all of that too. So we're very bearish here. We have a breakout to the downside, but let's say that we're out of volume. So we're basically like London Open, we're 2 hours past that, and we're really waiting for the next session at New York or pre-New York, and we're right in between there. So we can't really say that we got a lot of volume in here. So when we have these times of very low volume, what you tend to see is maybe, yeah, we could begin to move a little down here, but we might just come right back up, you know, not even get faked out yet, but just see some candle closing like this. Now we get one more above the range. And then when we have volume on the charts, you really see these candles coming down and closing below. And now we got the volume. So now people can take this trade here, move it down. And you see, we didn't really move here because we didn't really have volume. So you've really got to identify when we have volume on the charts. I posted a video saying why I want to trade in a high volume time, and that video is coming out or is out now. And I really suggest that you gotta watch that before jumping into this concept here of volume, because it's a very simple concept, but I explained it all in that video. So go watch that first. And yeah, so I really gotta say that it's really important too that you understand when we have volume on the charts and when your session has volume, the sessions you're actually gonna trade. So yeah, so those are really the 2 reasons here that you could see fake outs happening on the charts, or you could actually get faked out because we have people going against the trend, or we have lack of volume. That's really the 2 main reasons I see why people get faked out on the charts when they're first coming into the charts, or when they're just struggling with understanding fake outs in general. So yeah, I really hope that you liked this video here. I really hope that it could give you some more insight about understanding fake outs, you know, how to avoid them. And I hope that you could just use something from this video for your own trading. So I see you all in the next video. See ya.